And the bulls, they are back, and they are back with a vengeance. Indian markets on Thursday posted strong gains across the board amid favorable global cues after the US Federal Reserve kept doors open for 3 rate cuts in calendar of 2024. Nifty is back above 22,000, surging 0.79% or about 172 points today. The index, by the way, is back above its 50-day moving average after 2 sessions below it, and that's a big positive. Remember, midweek we had broken below it, and this was a first slip below the 50 DMA since November of 2023. So that was a big sort of a sentimental dowser, if you would like to call that. So let's just look at it as a first win in several battles that will follow from here on for bulls. But is it all sunshine and butterflies out there? No. Most of the gains that Nifty saw today came right at the opening, meaning there was no follow-on buying. Also, Nifty has made a spinning top sort of a price chart, sort of a pattern on the price chart, which indicates indecisiveness in the markets. And again, remember, today was a weekly FNO expiry, so maybe some of that upside was a result of short covering, because as I said, the markets opened gap up, so that perhaps could have squeezed out some of the short bets from the system. So keep all this in mind. I mean, the texture overall does look positive, but we will have to see follow-on buying, and I mean that that is something that we'll need to track in the days to come. And to answer that and more, Mr. Aamar Deo Singh, Senior Vice President of Research at Angel One, joins us. Thank you for joining us on the show, Aamar. You're still in Dubai? How is the weather out there?
Yeah, I'm just back last night, so at 4 a.m. this morning I've returned. So weather's good there. Weather's been pleasant.
All right, because the heat is starting to pick up here, and the markets, they are, the heat is getting there as well. I mean, look at the day's performance. I mean, all thanks to this dovish commentary from the US Fed, and I'll get to it in just a bit. But Nifty, sir, it's back above 22,000. The broader markets, they are doing phenomenally well. Volatility also slipped today. I mean, that is certainly to improve, show that the sentiment is also improving out there. So, lot of positives for us to celebrate. But the big question really is, will there be follow-on buying when we come back tomorrow?
I think that's a very good question. We also need to remember that today was the weekly expiry, so there's been some movement with regard to that, because there were expectations that markets could correct. But as you rightly said, the US Fed's statement that the markets are anticipating that there could be a rate cut in June as well. So I think that the markets have taken positively, which has definitely supported the markets. And also, if you look at the broad-based sense, so we've seen some pullback in the mid cap and the small cap this week. So they are up by almost 0.7%. But that you can say is more of, I would say, some sort of pullback after the correction which we have witnessed. But some positive triggers there, that we see India VIX trading around 12.5. So that definitely is a positive. And the markets are actually looking for some sort of further triggers. The US Fed statement definitely is one of them. Also, if you look at the derivatives data, if you look at the PCR for the next week, that stands around 1.1. So that's, I'll not say mildly, it's not bearish per se, it's not very bullish though. And looking at the heavyweights, we've seen that TCS and Infosys, they have cracked this week. They're down by almost 5%. But rest of the heavyweights, be it the banks or Reliance, they've maintained their ground. And if you look at the advanced decline today, also that's been significantly in favor of the bulls. So it is a tussle. It's a tussle, and the range what I see for Nifty is somewhere around 21,700 on the downside, 22,200, 300 on the upside. So that's a 500, 600 point range which Nifty is likely to trade in. And looking at the short-term charts, they are clearly trendless, honestly.
So the sentiment certainly has improved, as you also pointed out. On 13th March, the advanced decline ratio was 1:22, meaning 1 share rose for every 22 that fell. Today, it has improved to 4:1. 4 shares rose for 1 that fell. But, I mean, on a day like this, when there is an overnight event, if there is a positive news out there, most of the upside gets factored in right at the open. And, for the average investor, not much is left, sir. So what do? I mean, they are pretty much just left scrambling for crumbs.
Yeah, so if you look at the markets and if you look at the trader's psyche or psychology, you'll find that the professionals are more active towards the end of the day. So
Right.
if they are confident to a certain extent, they'd like to carry their positions the next day. And that's what we witnessed, because they definitely have some perception as to what is likely to happen or what the US Fed is likely to weigh upon. So I think that's one area where the professionals score over the, I would say, the amateurs or the rest of the traders in the market, because the rest of the traders would like to jump in when the market opens. And jumping in just when the market opens is never a good idea. You should give the market at least a 15 minutes time period to settle down, at least from 9:15 to 9:30. Post 9:30, you can decide what action you wish to take, whether on the long side or the short side, based on technicals, based on derivatives, or based on some any other data which you analyze. So I would say that's something one definitely needs to look at. And what we've seen is when the market is opening strong or is closing strong or firm, or there's some very strong derivatives data which is there, that generally helps the market. But you have to keep only one thing in mind, that on expiry day, none of the derivatives data really works, because it can change on the flip of a coin. So that's one important point that I definitely like to highlight.